If saving money is so simple, why do most people never build capital? The strategy is extremely easy. You earn money, you spend less, then you earn, you save the difference, you invest it. That's how wealth is created. But in reality, almost nobody follows this rule. Why? Because there is one hidden mistake almost everyone makes with money. And today I want to show you exactly what that mistake is. I'm Ravi Gabis, and welcome back to the Ravi Gabis Show, where we unlock the secrets of real wealth every single day. If you want to understand how money actually works, not only investing, but also the psychology and the strategy behind wealth, subscribe to the channel. Here we talk about capital creation, financial thinking, business, and practical systems for building real wealth. And if you want to go deeper, there is also a free webinar in the description below where I explain the complete system of building capital step by step. You can watch it after this episode. Now let's continue. We have talked a lot about beliefs and the fact that they control our lives. But in reality, it's still hard for many people to believe that. So today I want to give you a very practical example of how it actually works. We're talking about finance here and about the strategy of wealth creation. I call it the abundance strategy. And the strategy itself is extremely simple. You make money, you spend less, then you earn, something remains, then you invest that money and multiply it. And that becomes your capital. The capital that eventually creates passive income, by the way. Very simple. But even though it's simple, it's not easy to follow. If we look at this abundance strategy, that is the most important. What is the most important part? The most important part is controlling spending so that something remains. Because if nothing remains, you cannot invest. You cannot multiply money. And without that remaining part, capital will never appear. Sometimes when I explain this strategy, people tell me, I don't know how to make more money because I spend everything I earn and I don't know how to make more. And I say, okay, if you cannot make more money yet, just try to spend less because spending less is always easier than making more. 10 years ago, you were living on less money and you survived somehow, which means you can do it again. You just need to change your approach. And there is a very specific approach to doing this. Maybe we should talk about it today. Let's do it. Because the first step, saving money, is actually very simple. People often tell me, I can save money, but I don't know where to invest. And I say, that's not a problem. You don't even need to invest in the beginning. Just save. Just by saving money, you will already start building capital. Your capital will begin to accumulate, and later, step by step, you will figure out what investments are. At the very beginning, you can even do the simplest thing, put the money in a bank account and receive a small return. But here's the interesting question. People still cannot save. Why? Why does it work this very way? Let's go back to the abundance strategy. Everyone earns money. Everyone spends money. But not everyone has something left. And that remaining part is the most important part of the strategy. Let's imagine a typical situation. You receive your salary, then you start spending it. First, you pay for things that are absolutely essential, things you cannot avoid paying. For example, loans, mortgage, food, utilities, gas for your car, some basic needs. Then there are other things. Maybe you have business lunches during work. Sometimes you go to a restaurant with friends. Sometimes you just grab a coffee. Then suddenly you discover something online that you feel you absolutely need, some product from a company you never heard about before, but somehow it becomes necessary. Then there are other expenses, school payments, additional lessons, different small costs that appear throughout the month or week or the period. And somewhere in your mind, you say, I will save money at the end of the period, of the week or of the month. if something is left. Then suddenly something unexpected happens. Your car breaks down. Your job is 20 miles away, and you understand that without the car, you cannot even get to work, especially in the United States, where public transportation is limited in many places. So, what do? You take the money you wanted to save and use it to repair the car. And at the end of the month, what do you have? Nothing. You couldn't save anything. Why does this happen? It happens for one very simple reason. You're trying to save at the end of the month. After all, obligations and spending are already covered. And if you look at your list of expenses, saving is always at the very bottom of that list. It's the last item. And because it is last, it usually never happens. And the solution is actually extremely simple. Instead of putting saving at the end of the list, you put it at the beginning. You save first, then you spend the rest. For example, you receive your salary, immediately take 10% away, you save it, and only then you spend the remaining 90%. At first, this may feel frightening. You may think, how can I live on 90% of my income? But the truth is very simple. Several years ago, you were living on even less money, so you can do it again. Just imagine the list of your expenses. All the items on that list take your money. You pay everyone. You pay for everything except one person, yourself. But who's the most important person in your life? You are. So put yourself at the top of the list. Pay yourself first. This is the fundamental difference between rich people and poor people. Poor people pay themselves last. And what is left at the end? Nothing. Because there is a simple law of spending. Money tends to be spent. If it is available, it will disappear. But rich people do the opposite. They pay themselves first, and only after that do they cover their obligations. Think of it as a tax. If the IRS comes and tells you that you must pay 20% tax, you may complain, but you will still pay. So treat yourself the same way. Create a rule, 10% tax for yourself. History gives us many examples of people who built very large capital while earning only $30,000 or $40,000 a year, or even less, simply by consistently saving a fixed percentage. Just like paying a mandatory tax, the strategy itself is extremely simple. Anyone can do it. And I encourage you to start today. Just change one thing. Put saving at the beginning of your financial list. Pay yourself first, then cover the rest of your spending. And if your current income is not enough for everything, then your brain will start looking for ways to earn more. And that is actually a very powerful effect. But the interesting question remains. If this strategy is so simple, why do so many people fail to follow it? Why do people understand the rule but still cannot follow? The answer lies in how the brain works. So today we talked about one of the most important principles of wealth creation. The strategy itself is very simple. Pay yourself first. Put saving at the beginning of your financial list, not at the end. And once you start doing this, something interesting happens. Your brain begins to look for new ways to earn more money. Tomorrow we'll go deeper and talk about something even more interesting. Why the brain actually resists this simple rule and why most people fail to follow it. If you're serious about increasing your income and building capital, subscribe to the channel. And if you want a structured system building wealth step by step, the free webinar is waiting for you in the description below. I'm Ravi Gabis. See you in the next episode.